Welcome to More Fun with Finance. I'm Dr. William Elliott, coming to you from my studio in beautiful uptown Shaker Heights. So this is just a little introductory video to get you started in the class. Going to show you around the syllabus, talk a little bit about the subjects that we're going to study this semester, and some of the important details that you'll need to know in order to be successful in the class. All right, so let me get out of the way here and get over to my slides, and let's get started. So since this class is entirely remote and online, most of it is async, I do want to have some synchronous components, so I've got a few spots in here where I require that you all send me an email and set up a time to have office hours. So that way we can have a live conversation, and that's at your convenience. So make sure that you follow those instructions. I appreciate it, and that keeps us in that environment that John Carroll is so strong in, which is kind of that personal touch, that individual care for the whole person. So anyway, let me get started here on the Canvas site, which is really most of where you'll be interacting with the course is on Canvas. This is the home page right here that I have up behind me. And so you have already obviously clicked on this first video, the Introduction to Fundamentals of Finance. By the way, if you hear walking around in the background, I apologize. That is my producer, Cheyenne. She is a 6.5-year-old German Shepherd, and she likes to keep pretty tight wraps on what we do here. Anyway, you may meet her later on as she pops in at any moment. Anyway, so this is the home page. I'm going to start by going to the syllabus, which is right down here. And let me get this set up so I can actually write on the syllabus a little bit and get this up out of the way. Okay, so just to start with the basics, obviously this is Fundamentals of Finance 5521, and the whole point of this class is that you probably were not a business major, so you didn't have any coursework at all in finance, and that's what this class is about. It's kind of a leveling class, bring you up to speed with the subject, and then allows you to have a background so that you'll be able to take more advanced courses in finance and understand what's going on. A lot of the basics are pretty much that. They're very basic. I mean, when we talk about time value of money, things of that nature, some of the theories are once you've seen them, they've allowed to kind of percolate in your brain. It'll make a lot of sense, I hope. All right, so obviously, there's some prereqs here. It's very important that you've had these prereqs. If you have not had these prereqs or their equivalent, I suggest that you get those done first. As far as contacting me, I'm in the office SB 227. That's in the Econ and Finance departmental suite. So you can actually meet up with me during office hours if you'd like. By the way, I've got office hours for my face-to-face classes, and you're always welcome to either attend that, or you can call me, or we could Zoom during that time. But normally that's Tuesdays and Thursdays from 12 until 2, and then I have a class at 2:10 to 3:25, so then I'll continue another hour of office hours from 3:30 to 4:30 on Tuesdays and Thursdays. However, note that I am available by appointment as well. I understand that you may be working during those hours, and if you need to get in touch with me, we can always touch base on the weekends or in the evenings or other times during the day. All right, and in terms of my phone number, my office number is 216-397-4584, and my email is welliott@jcu.edu. And note, when you're emailing me, this is just a good practice. Most of you are already in business, so you probably get this, but I've got a bunch of undergrads that tend to forget the last T on my name. And so it's always more respectful if you try to get the person's name right. I try to do the same for everyone else that I interact with. Email is bad enough as it is. All right. Course description, it pretty much is that intro to finance, but we're going to talk about the individual subjects here in just a minute, so I'll leave that for you to read, along with the learning goals, which are all important, but you can read that on your own. Let me get to the textbook, and the textbook is going to be an ebook, and this is, I think it's on its like 13th edition. They actually call it the 2024 release. I'm not sure what that's about, but that's what this text is actually labeled. And it's by Steve Ross, Rudolph Westerfield, and Brad Jordan. Brad Jordan added on here. He's very good at writing. He's written a number of other textbooks that I use, and he's very clear. So hopefully that will be your same experience here. It's a McGraw-Hill title. We'll be using their Connect product, which is an online learning platform. It includes their ebook, which they actually refer to as their SmartBook 2.0. A little more about that in a second. And then we'll be doing our homework on there as well. So as far as this SmartBook 2.0, when you're reading, what it will do is it will pepper you with multiple choice questions about the material that you have just read. And depending on how you answer those questions and your confidence level of answering those questions, it might refer you back to the text. I think that's a great way to learn, so I would let the process work. Try it. Hopefully you'll see that it actually does improve your learning. The other thing, let me mention here while we're talking about Connect, I have seen in the past where some students on the homework have completed an entire 20-question homework, which included probably about half of those were questions that required a calculator, some sort of analytical stuff, and they were answering them in the 3 to 5 minute range, all 20 questions. Even I can't do that. So if you're just there to click through and get the right answer and get credit and move on, this is, you should rethink that, honestly. I mean, this is college. You're here to learn something as well as get that sheepskin. And you may as well, right? I mean, you're paying for it. This is your time you're spending, and it's material that you do need to know. So don't just click through it. Those same people, by the way, I can see the time you spend on these same people who did that didn't fare so well on the midterm or the final exam. So keep that in mind. I really strongly recommend that you spend the time on this. Don't just look at it as another thing to click through. It's not. We will be using a BA2 Plus calculator for some of the chapters where you need to calculate time value of money, present values, future values, annuities, perpetuities, things of that nature. BA2 Plus is kind of the standard calculator. That's what I'm going to be demonstrating. Here's an example of the BA2 Plus. This happens to be a black one. They come in different colors and flavors, but it's pretty decent calculator. I've got a electronic emulator here on the computer that allows me to use the exact keys, and it will show you how to work this particular calculator. If you have another type of calculator, they're all real similar, but I'm going to be using the BA2 Plus. If you have something else, you'll have to find support material online. In terms of grades and how that's allocated, right down here in particular, when you look at the points or the percentages, it amounts to the same thing. 15% of your grade is based upon just going in and doing the reading, completing the questions as you read through it. Another 25% is based upon you're doing the homework. And I do round up both of those, so suppose you get a 90 or an 85 or something on any of those exercises, I round those up to 100. So don't worry about little points here and there. I do drop the lowest grade, so if you miss one or something in an async class, you shouldn't. There is no deadline other than for the midterm exam and the final exam. But if you do miss anything, I do drop that lowest grade. The midterm and the final together make up 60% of the class. And midterm is 25, the final is 35 because the final is comprehensive. Both of those are multiple choice questions, and we'll be using the Lockdown browser and a monitor system for proctoring that exam. In terms of letter grades, how the points or percentages convert to letter grades, that's right down here. And so I'll leave that for you to browse through that. The midterm exam. While this is an async class, I am going to require that you take the midterm on or before March 16th. So after March 16th, in fact, what it says here, it has to be taken prior to March 17th. That's a Monday. So March 16th is a Sunday. You could take it that Sunday if you wanted to, or any time prior to that. But you must take it on or before that date. Again, this is past experience speaking. I've had students who have waited to do the entire course in the last week or two, and they're clicking through and not really learning anything, not doing particularly well on the exam either. And I'm trying to give you sufficient time to get that material read, and yet still give you sufficient time to read and work on the second half of the semester. Now, if this presents some sort of problem for any of you, please do get in touch with me and I will work with you. All right? But that's going to be chapters 1 through 8 on the midterm. The final exam will focus on 9 through 14 and 16, but it will be comprehensive. So there'll be some questions out of the first 8 chapters as well. So that's the exams. Email protocol, I'll let you read that yourselves. Academic honesty, please make sure that you follow that. And now we get down to the schedule of topics. So this first chapter is just an introduction to finance in general in the markets. So there is no lecture on that, and I'll just let you read through that. It's fairly self-explanatory. Chapter 2 and 3 get into some of the basic ideas that or some of the basic fundamental concepts that we use in finance. And most of these relate to some sort of accounting measures. So we're going to look at financial statements. We're going to look at balance sheets, income statements, statement of cash flows. We're also going to look at taxes. And then we're going to talk a little bit about the difference between cash flows and earnings. You may know that a company has earnings per share or net income, but in finance, we're less worried about those because those are figures that can be somewhat manipulated, and I don't mean that in a pejorative sense, but it's some of those figures are the result of decisions made by accountants. And in finance, we like to deal with just cash flows and no other manipulation. That's less likely to be manipulated by accounting practices, and as a result is a more certain number to work with. And we'll be using cash flows quite a bit as we value companies, as we value their stock, as we value their bonds and things of that nature. We'll also look at a bunch of ratios and how to understand a company by analyzing its ratios. Things like ROE, ROA, you've probably heard of, but then we're also going to be looking at various types. Those are profitability measures, by the way. We will also be looking at things like some sort of efficiency measure, liquidity measures, both long-term and short-term, things of that nature. We'll be taking ROE and actually breaking it up into component pieces and trying to understand what is driving a company's ROE as well. Long-term financial planning and growth, that gets at looking at various types of projects that the firm could use to expand its sales, to grow its profits and things of that nature. Then we come down to valuation of future cash flows and actually the future value of present cash flows. Chapters 5 and 6 dig into this. The main thing behind chapters 5 and 6 is time value of money, or TVM. TVM is so terribly important. That's why we spend 2 chapters on it. The first chapter, chapter 5, looks at single sums predominantly. So What you're going to be looking at is figuring out the future value of an investment that you make today based upon its expected return and things of that nature, and its compounding and so forth. Another single sum type calculation we could do is we could figure out what is the present value of a future sum that we might receive. How much is that worth today? In the first case, we'll be compounding our present values to get a future value. In the second case, we'll be discounting our future values to get a present value. And in chapter 6, we add to that multiple cash flows. So we may have not just a single cash flow, but we might have multiple cash flows out into the future in various years, or maybe quarterly, semi-annually, and so forth. And so these two chapters in particular, I want you to set up an office hour with me after you have completed chapter 6 to make sure that I can answer any questions that may be remaining about that material. That's how important it is. It's really a large part of finance is doing some sort of time value calculation. If you're calculating the value of a stock, if you're calculating the value of a bond, you're using time value of money. All of those things are related to this fairly basic concept, and so it's very important that you get it down solid now. And as I mentioned, bonds and stock valuation, that's chapter 7 and 8 respectively. And those chapters are going to look at how do I value a bond? How do I tell what it's worth today, given its coupon, its face value, its time to maturity, and the current market rate of interest. In chapter 8, we'll be looking at various models that are used to value stocks. So we'll be looking at the dividend discount model, and we'll be looking at some sort of discounted cash flow analysis, i.e. DCF analysis. And after chapter 8, that's when you should schedule your midterm. So that's the first half of the semester. And second half of the semester, we'll be doing chapters 9 through 14 and 16. And so chapter 9, 10, and 11 relate to this thing we call capital budgeting. And capital budgeting in its most simple essence is basically the idea that we want to try to figure out, is a particular project worth doing? In other words, will it increase the value of our company if we take on this project? We don't want to take on projects that don't increase the value of the company or create negative value. We only want to take on projects that give us some positive increase in value. And actually, since the sum of the MPVs is literally, quite literally, the value of the company, we're going to use this rule called the MPV rule, net present value. There are other rules out there. We'll talk about those. They have been used in the past, and many managers still use them today, but they are seriously flawed in a variety of ways, and we'll talk about those flaws in that chapter 9. Then in terms of how to make those decisions and how to analyze projects and different types of investments that a firm may take on, chapters 10 and 11 flesh the rest of that out. Chapters 12 and 13 get into the relation between risk and return. And in particular, we're going to be building up the understanding so that you have at least a rudimentary understanding about how the capital asset pricing model works. And that's also known as CAPM. And if you haven't heard of CAPM, you may have heard of beta. And beta is the measure of risk that a security will add to an already otherwise diversified portfolio. So we'll be talking about that sort of thing. Obviously, you've heard of the old adage, there are no free lunches. Well, that's really what CAPM is about. High risk means high return. If you have a high return with a low risk, something is amiss. Don't ever buy that story that, oh yeah, we can get you a great return with almost no risk. That's something is amiss there. If you want high return, you usually have to take on high risk. Then finally, the last two sections of the chapter will be talking about cost of capital, which is really the way we figure out the riskiness of the firm. there's this thing called weighted average cost of capital, or WACC, W-A-C-C. And we'll be talking about that. How do we calculate it? How do we use it? It actually gets used up here in this capital budgeting situation. And that's what we're going to be discounting these future cash flows by, is our weighted average cost of capital. And then finally, we'll be talking about financial leverage and capital structure. Capital structure, again, in its simplest form, is just the amount of debt versus equity that is used to finance the company's assets. So we'll be talking about, is there an optimal capital structure? Is it the same for all firms? What sort of models are out there that are used to determine what is the best capital structure? Some of the agency issues related to capital structure. All of that is contained in this last chapter 16. And then again, the final exam has to be taken on or before the end of the semester, and it will be comprehensive. About, I want to say 20 to 25% of it will be from chapters 1 through 8. So don't forget that material after the midterm. Other than that, I think that is about it for the course in terms of the syllabus and the subjects. I've got various modules out here, and let me get back out of this. If you go to the module section here, you can see the start of the class. We've got a little discussion about what this module is, some of the learning goals, and then you've got links to the read, watch, and the assignments. So you can just click on here to read the introduction. This will automatically take you to the McGraw-Hill Connect product. If you have never done this before, the first time you go here, it will actually say, hey, you don't have an account. Do you want to set up something? So go through that process. You need to have a credit card available to do that. But that'll allow you to buy the ebook, the SmartBook 2.0, as well as the homework that we'll be doing. So just to give you an example, here's the reading. It'll launch the SmartBook. And then I can choose to either start reading immediately, in which case it will take me to the book, or I could start with the questions. But I would recommend that you start the reading, and then as you're doing that, it will start peppering you with the questions about that material and suggesting that you go back and reread certain areas depending upon how you answer the questions. So that is the reading part of this. And let me close this window out and go back to Connect. And let me go show you one of the homeworks. And again, it should automatically take you to their site. And so the homework, you can go through here. For instance, in chapter 1, there are 15 homework problems. You select the answer, and then you can keep moving through the questions. Let's see, so that's modules. And if it's, for instance, here in module 2, where we're looking at financial statements and ratios and things of that nature, notice here down at the bottom, this is where I ask you to set up a office hour with me. It doesn't need to be an hour per se, but whatever time you need, so that we can talk a little bit about the material. And if you have any questions, I can help answer those questions for you. So that's it in terms of the modules. The grades, let me mention that just momentarily. I am weighting the grades in Canvas. However, those will not necessarily include curves or anything of that nature. So if you're trying to figure out your grade, don't use Canvas. It won't necessarily give you an accurate reflection of what your grade will be. So you can use it to figure out the grade for each particular assignment, but the weighting scheme, while I've embedded it in here, I don't necessarily trust it. Plus, like I said, I will curve the midterm and the final exam if necessary. and those curves will not necessarily be in the Canvas page. I usually work on a spreadsheet to do all of my grades at the end of the semester. So if you do have a question about grades, feel free to reach out to me. I'm happy to help you walk through that and navigate that piece of it. So I look forward to meeting you all. I hope you have a good semester. And don't forget, if you have any questions or any concerns, especially if you can't make that midterm deadline, reach out to me sooner rather than later. I look forward to the rest of the semester. Thank you very much. Bye-bye.